So I'm really excited to talk to you, Carrie. You come to us with years and years of experience directly funding builders in various capacities, whether they're doing fix and flips, whether they're going vertical, horizontal, they're at various stages of their project needing a builder loan. You've got this really incredible background of specificity here, and you're at Gill Mortgage, helping us run our builder services division, which is now expanded. Not only do we have this capital offering that I've never had in my 18-year career, but we've also got some software tools around this product that help builders with more efficiency and design, that are utilizing AI, that are seeing some builders save 7 to 10% on their build costs and design costs. So we've got some exciting stuff happening in our builder division at Guild. I want to bring you out to the world, and I want to just today talk about the products that we've got the availability to. But before you share your screen and we do that, what's the current problem right now for builders with banks? Because I'm in Reno, Nevada, and my dad's a drywall contractor. He's also built a couple subdivisions. My brothers are in the industry. You know, I'm invested in some projects, so built apartments and blah, blah, blah. Like, what is the problem? Why would a builder have an appetite to check something like this capital source out when they have a long-standing relationship with their local bank that has funded other projects? What's kind of going on in the world of construction financing, and why would somebody want to look at this?
Yeah, that's a great question, Shayla. And it's a question, that I get asked by builders all the time across the nation. But what I'm finding when I talk to them is their banks are becoming more restrictive. Their covenants are strong, and they're not lending out as much as they used to or once did. And their leverage is shrinking a little bit. So we're up in between 65 to 70% loan to cost, 85% loan to value. And we have a lot of opportunities that banks don't necessarily offer. We also have flexibility in our draw schedule and our draw cycles, whereas sometimes banks don't. Also in the capital that they're able to distribute. I have builders right now that are really stuck because they'd like to build at a quicker pace, and their banks aren't allowing that. The banks are being very restrictive and saying, hey, we're only going to offer you a $2 million line of credit to build out these 30 homes, and it's going to take them a lot longer to build these homes. They also need, they're restrictive on their starts, so they're only allowing them to do a couple starts at once. They have to have the homes under contract before then they move to the next set of starts. So it's really challenging for the builder to get their product completed and out to today's market rather than tomorrow's market and down the road. And so it's really a challenging time right now for builders. So we're really helping our builders with the velocity of their build cycle and getting things moving a lot quicker.
Killer. And I would say there's a lot of builders that see a lot of opportunity right now because they're seeing we're not going to have this flood of inventory. You've got 65% of homeowners have an interest rate below 4%. They're not going to be flooded with inventory. And we know the market's frozen with indecision with interest rates and what the Fed has done, right. But also build costs have come down, and you've got subcontractors that are hungry and willing, and you've got an inventory problem. So, where does this feed into that? So let's just dive in and do a high level overview of the type of products that we've got, so that, a builder might check this out, Carrie, and go, yeah, I do want to look at an alternative to my traditional bank or current financing structure.
Absolutely. And it's always great to have additional resources. So let me share my screen and go over a couple of these things that we do have to offer. Okay, and then we have some amazing loan products that we offer to our builders and investors here at Guild. We have a straight construction loan. This is for financing on lot acquisition and vertical construction on any permit-ready project. So this is just straight construction. Then we have our all-in-one. This is financing for entitled land acquisition or refinance. So it just needs to be permit-ready land. And this is for horizontal lot development and vertical construction. So we can complete all of that infrastructure work and then roll into multiple phases of vertical. Then we also have a guidance line, and our guidance line is very similar to a line of credit at a bank. There are some finite differences here, but this is basically for the acquisition, development, and lot banking and vertical construction for your projects, and it's a reusable credit facility. So you can keep reusing that line of credit for up to 36 months. Then we have our bridge loan, and our bridge loans are for purchase, refinance, or cash out on loans with an existing structure in place. And our fix and flip loan is for financing for properties in need of renovation. Now we also have multifamily loans available. And this is for financing on, apartments or student housing, different things like that. We can certainly do this, and you can use us as a resource for that. Some of our general loan guidelines. So all lending is for investment purpose only. This is business purpose use loans only, and we'll always be in first position as a lender. Interest is calculated on the drawn balance of these loans, and all loans have the ability to carry an interest reserve. Now, that doesn't necessarily need to happen. A builder can service their debt on a monthly basis, pulling capital out of their pocket, no problem. Oftentimes that builders find it a lot more easy on their pocketbook in order to have an interest reserve so that they don't have to service that debt monthly. So borrower guidelines. Again, this is not for individuals. It's LLCs and corporations only that will be funding and having on title. And we have a minimum credit score of 660. We do have some flexible underwriting. So if the credit score falls a little bit below that, as long as there's some positive compensating factors, then we'll go ahead and look at that. We evaluate the project as a whole. We do have a reserve requirement of a minimum of 5% liquidity aggregate with all the partners or members in that company. And we just want to make sure that that 5% aggregate liquidity is relative to their max loan commitment. And then I say they must have built and sold the same number of units or more in the last 18 months. What we're really looking for here is apples to apples build. We want to make sure that the builder does have experience in the product that they're looking to build and the financing that they're looking for. So we're not looking for a builder that is going to be, wanting to build out an apartment complex that they've never built out before. So we're going to be looking at, apples to apples on the financing there. We certainly want to help, though, a builder scale their business and grow and expand. And then we do ask for a personal guarantee. It's not necessarily a requirement. However, we're looking for a personal guarantee. We can do completion guarantees and limited guarantees on a case-by-case basis, but we are going to add a 0.5 point to that fee at closing, just because there's legal involved and other resources that we utilize that allow us to do that. And then we have some case studies here on the loan products that we offer. So our first is our construction loan. Again, our target client here is builders building anywhere from 5 to 500 plus homes a year and experienced investors. And our case study on a construction loan here is, this was a 30-unit townhome build just inside of Denver, Colorado. The loan size was $13.8 million. We had a loan to value here of 60% and a loan to cost of 80%. The term here was 18 months. So the builder in this case was very experienced. They had just sold another 33-unit townhome not too far away from here, sold out almost instantaneously, and wanted to develop and build out another 30-unit project. So we were able to provide the financing for them. And in this period of time of 18 months, they built this and sold out all the units very quickly. So it was very successful for them.
You're saying, though, generally a term could go as long as 36 months.
Terms go up to 24 months on these products. Our guidance line will go up to 36 months, but the general term is 24 months on our loans.
Got it.
Okay, and then we have our all-in-one loans. And again, the target client here is production builders building anywhere from 50 to 800 plus homes a year who'd like to take their projects from that development into that vertical construction phase. So the case study here is, this was in Idaho. The loan size was $20 million. And they just needed this first loan for 15 months. So what the builder was doing here is developing out this 145 lot plat and then going vertical on 20 of the homes in that first phase. And then looking to us for future financing in all those remaining phases. So again, the borrower profile, they have a high level of experience here. They are a real estate investment and development company. And the leadership's experience includes single family subdivisions, attached townhomes, urban infill, and high-rise luxury condos. So as you can see, we're looking, to provide financing for those that are, educated in the space and that have done something like this in the past. Also, I wanted to note that as you can see by the profile on this borrower, they've built over 45,000 homes totaling more than 50 billion. It's likely that they're financeable by a bank, but they're choosing to work with us because of limitations that the bank might be putting on them, and our flexibility and our quickness and responsiveness, our draw schedules. There's a lot of things that we can offer to our builders that a bank won't necessarily offer. They're going to be a little bit more restrictive. So they're
I
working
think
with us on these projects.
this is a chance to say that our capital partner for these products has been in this space for 14 years, has funded over $6 billion worth of development, has a really good team. So it's why builders like this continue to work with them. That was important for me to see.
Correct.
Right?
Yeah.
Yeah.
Absolutely. You said 6 billion, right, Shayla?
Yes.
Yeah, 6 billion. And then next we have our bridge loans. So our target client here is builders with a finished product and builders and investors purchasing their next project. These bridge loans are really interesting and they're really helpful for our builders and investors. The case study on this one is in Florida. And what the builder was doing here is actually it was an investor that purchased this project and then partnered with the builder. They've done this multiple times in the past 18 months. So what the investor does is they'll vet out any properties that might be a little that are in need of renovation, or there's other homes in this area that are larger in size and they're getting that higher price point. So what the investor did here is purchase this home and kept the tenants in place, went through the design and permitting process to demolish this home, and then he partnered with his builder to build a larger one in its space. So initially, this started out as a bridge loan, and then it was refinanced into a construction loan to build out that home.
Awesome. And that's when it could be purchased as an LLC or some sort of business entity, keep the tenant in place, do the design, and then get the construction loan for the final investment product.
Correct. Yep, that's right. And then next we have another bridge loan case study where the builder here had completed 15 homes. They needed more time on the market. They were at term with their other lender. Additionally, they were looking for more capital to infuse into their next project. So what they did here is, or what we did here is refinance these homes and pulled out equity out of this project and then gave that to them to then infuse into that next project. So we were able to increase the loan to value on this one up to 70%, and loan to cost was at 80% here. They just needed a 12-month term to get these sold off and immediately start on their next project that we help them finance as well. Okay, and then we have fix and flip loans. Target client here are professional real estate investors. Again, we're looking to just want to make sure that in this fix and flip space that the investors here do have experience, that they've had a couple flips under their belt, not that they've necessarily done for somebody else, but that they've done for themselves. So we do need to make sure that they do have that level of experience. So this is in Park City, Utah. So the real estate developer came in here and purchased this home that was already starting with renovations. The homeowner didn't have the wherewithal to complete the renovations. They were doing high-end finishes on this, and the builder simply just completed the same structure with the high-end finishes and sold this home for a pretty large price point. I want to say it went for like 3.5 million. It's a good size flip. So this is just
project.
Yeah, great project. And this is just a straightforward renovation and sale.
So when they came in and bought this property for I guess the loan size was 1.6 million. So they bought it based on the loan to value of the purchase price. Is that how that worked?
The loan to value of the as complete.
Oh, as complete. Okay,
Yep.
Wonderful.
Yep. And, I'm not going to go into the huge depth on this one, but this is a fix and flip that we did in Myrtle Beach. It's a 169 unit condo structure that the real estate developer wanted to keep in their portfolio. So we helped them with the acquisition and renovation funds to then renovate this completely and then keep it in their portfolio. So this is something that we can do. And oftentimes we're not looking at, we look at flips as single family 1 unit structures, but in that case, that was a pretty large structure. So we can do definitely something like that. And lastly, we have our guidance line. So our guidance line is one credit facility that has essentially 3 different buckets of funds, if you will. Funds for development, lot banking, and the vertical construction. And again, this is available capital that's reused as many times as needed, and multiple loan products under one facility. And it really helps streamline underwriting so that you do not have to close multiple loans and multiple products like development, and then move into, five new construction homes, or, whatever it might be for the vertical financing. It's just all at once, and it really helps move your project very quickly. Again, it helps generate less paperwork, and it allows you to easily shift from one phase of your project to the next phase. The one qualification is that the project must stay within the local MSA boundaries of the borrower. So for instance, if you're doing a deal in Harris County, that guidance line would need to stay within that county specific area. And then if a builder wanted to work in Harris County and in Liberty County on here, then we could do multiple guidance lines. That's no problem. We can do.
So you're saying this same guidance line could be used for different projects?
Correct. No.
So it's tied more to the builder than it is the exact project.
If it was in the same county, yes. But in separate counties, then we would need to do 2 different guidance lines, but we can go up to an aggregate of $50 million.
Wow.
Yeah.
Yeah. So our funding source is, I believe, got available capital of how much right now?
Available. Oh, 6 billion.
No, that's what we've done in the past, is 6 billion. We're partnering with a lending source that's done 6 billion. This is where you come to us from. But how much available capacity is, I believe I saw 700 million today. Like today, if I wanted to bring you a bunch of loans, you have 700 million to fund. Mm-hmm. And that's growing because big funding sources are coming to partner with this capital as well.
Exactly.
Right.
Okay, and then I went over this, the difference between, our guidance line and what a bank will offer in terms of a line of credit. But really, this is for all of our products. We have, the differentiation between bank requirements for all of our products is we have flexible starts. We have 3-week or less closing, so a lot quicker than what a bank will offer. Oftentimes you're going to reach that 45-day or 60-day marker with a bank, and they're not going to be able to fund that loan, or they're going to say, hey, instead of that $5 million, we'll give you 2.5 for this. So it really messes with the builder on that project. We offer different kinds of guarantees where a bank, is just strictly personal guarantees. And then we have that acquisition and land development available. Oftentimes you won't see land development available with a bank. Every bank is going to be a little bit different, but we're looking at the masses of banks, and that's what we're seeing. We have minor financial covenants. Our main thing is that 5% liquidity. And a bank is going to have heavier restrictions and covenants. So again, we offer a longer term, 12 to 36 months on our products, where banks are usually that shorter term. And then we have flexible, convenient draws. So those are some key differences as to what we have that a bank, might not offer. And then, guys, we have this amazing procurement platform. So this is absolutely enormous. This is a service that we provide to our builders when they finance with us. And what this is we're getting our builders national production builder level pricing on their hard cost of materials. So we're saving builders anywhere from 7 to 10% generally on their full budget for materials, which is absolutely enormous. And this is actually a very large CRM that we have for our builders that has, custom home plans, custom AI for their own plans, 3D renderings. You can change your exterior features, your interior features, a multitude of different things. What we really like to focus on is that cost savings on that materials program, but we do have a wide variety of other things available. And then additionally, it says, you know, we're reducing build cycles by an average of 19 weeks. And this is because we have an amazing platform where you have, you know, scheduling with these materials providers and information on, you know, if these products for some reason are taking a little bit longer in lead time, you can pre-order and get those, you know, on the list, and they'll come directly to the site and be shipped when you need them, you know, for the build out of the project. So
This is, yeah, this is a whole nother demo, getting to see what that looks like. And that's really fun. Carrie, thank you so much for going high level on these products. I think obviously every builder's at a different phase with a different type of project. They might need a refi to then go into their next phase. They might have a closeout with 3 or 4 homes remaining, and they want to bridge there to then buy the next one. So I can see why you love this space. I'm the daughter of a builder, and I've been on job sites since I was 2 years old. So I love serving builders, and I could not be more excited that we've partnered with you, Carrie, with your expertise, and that you work for us at Guild now leading up this division, but also that we have a capital partner who's saying, not only do I want to provide financing, but I want to help builders really use resources and leverage and AI and really help people win right now. It's a tough market out there. So we'll keep this short and sweet. But the next step would be get with your Guild loan officer. And Carrie's got a form to be filled out for like, what is the scenario with your project? And Carrie is our senior loan officer and liaison with our capital resource partner that can go, okay, well, let's talk about your specific project. And obviously in terms of financing rates and points, that's going to be customized based on the project and the term and all that. Am I saying that properly, Carrie?
Yes, that's exactly right.
Cool. Thank you for your time today.
Yeah,
Thank you for watching, everybody. And hopefully you'll find this a value in your business and your investments. And obviously our long-term goal with Guild is to be your takeout partner. We want to work with that end customer who's going to buy your subdivision homes or your townhomes or what have you. But we know if you're into real estate and into development, you probably got your hands in multiple things, and we want to be that resource that can help you power your business. So thank you for watching today. Thank you, Carrie.
thank you.
And have a good day, everybody.
Bye.